just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Trader Tea Time with me, Darius Anucauskas. Today's the 1st of December 2020. So yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at this morning just to see how everything's kind of getting along. But yeah, before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. Now, jumping into the charts. Now, the first one I want to pick up here is the German DAX. The index is trading in the positive territory today. However, it's still struggling with this 13,460 zone. Now, given that it's still struggling with that area, we'll probably take a bit of a cautiously bullish approach, of course, because, again, for now, everything's kind of still leaning a little bit more towards the upside. But in order to get a little bit more excited with the upside, well, I would like to see a push above the 13,460 zone. This way, the index would confirm a forthcoming higher high and more buyers could join in. Even if it drifts back down and let's say drops somewhere below the 13,346 territory, 46, 47, roughly around here, yes, we could go for a bit of a few lower levels here, but still we would be very careful near this short-term tentative upside support line taken from the low of the 13th of November. So for now, yep, continue monitoring this 13,460 territory. If we get a nice pop above it, then yes, higher levels could be met. Now, jumping into FTSE 100, I haven't looked at this one for quite a while, or actually, I have looked at this one recently. Yep, I'll have to rephrase that a little bit. I did have a look at this recently, and previously I talked about this idea where we could see maybe a bit of a correction lower here, a test of this 23.6% retracement of Fibonacci, which also almost coincides with the 200-day EMA and the 21-day EMA, and then if all this area provides good support, we could see a nice rebound here. As you can see, kind of came close to this idea of working out, but we didn't really reach the this 23.6% retracement on the Fibonacci, and yep, the index started reversing higher today. So of course it also got fueled by the slightly weaker pound today. So yeah, that as we know, that kind of works, and that's in benefit for the FTSE whenever the pound gets hammered a little bit. And yep, we could see this index now pushing a little bit higher. Now, initially I talked about this idea where we could see a nice rebound, but still my target would be near this 6,464 territory right here. So 64 mark could be that interesting level to keep an eye on, but for now we're just on the way there. Let's see if the index will actually end up going to this level, and if this level gets, or should I say this level surrenders to the bulls, well, I mean, higher levels could be met. First of all, we'll aim for that highest point of June near the 6,512 zone, a break of which would confirm a forthcoming higher high, and well, I mean, the next target could be that 6,856 territory. So keep your eyes on this one. Could be quite interesting, like I said, but at the moment we did have a nice already move higher, but probably at the moment I'll take a bit of a cautiously bullish approach as well on this one, just because, again, I don't want this suddenly reversing sharply to the downside and dropping lower. Now, in terms of the downside, I would probably wait for at least a drop below the 200-day EMA and then aim for some lower areas. At the moment, the downside is slightly off the table. However, with the upside, I'm cautiously bullish at the moment. Now, S&P 500, and yesterday the index drifted to the downside. It closed slightly in the red. It failed to move towards this all-time high near the 3,646 mark. But if we look at the cash index right now, we can see that the price is already above this area. So basically, we'll have a nice opening gap here to the upside. And now the big question here is how far can this travel? And well, I mean, let's wait and see. Of course, now the index will be in the uncharted territory. So yep, let's see if we can actually maybe make our way here towards that 3,700 level. Of course, maybe a bit too optimistic. However, don't forget that we are in the holiday season, and we are in the Christmas, in the so-called Christmas rally here, so right now. So the biggest benefiters from all this could be the retailers. So the retail might be driving the market, of course, together with the good improvements in the vaccine world. Of course, don't get me wrong, in terms of the retailers, we might not see the sales figures as we saw last week, but nevertheless, it will be quite interesting to see how December will look eventually for the retailers. But at the moment, there is some positivity in the market, guys. And like I said, given that the equity world continues to rise, then yep, that kind of indicates that yes, we are currently in that risk-on environment. But of course, keep your eyes on the news headlines, because if suddenly something worrying comes out, let's say for example something regarding the coronavirus again, or let's say the massive failure of vaccines or something like that, then yeah, well, I mean, that could turn ugly for for the indices for the equity world. But for now, everything seems to be quite positive. DXY, another index, but this one is a dollar index, and well, I mean, it's a bit of a roller coaster. I mean, this morning we were hanging still above this 91.75 territory, and what I was saying, that keep your eyes on it today, because if the index remains above it, then there is still chance for the bulls to step in and drive this one higher. But if the price suddenly starts dropping lower and remains below this 91.75 territory, well, maybe not all good is in the bull block, and yep, further declines could be possible. Now, as you can see, yesterday we had that drop, but the bulls managed to kind of lift the index back up. And to be honest, now this move lower here, it looks like that a lot of buyers are getting taken out right now, and that's why I'm not going to rush into anything yet. That's the reason why I said to you guys this morning that although there was a bit of positivity here, still I would get a little bit more comfortable with the upside if we would get it at least a push above the 92.24 level, or even better, the 92.61 zone right here, because at the same time the price would be placed above the 21-day EMA. But we didn't get that move, and instead we're getting a drop back below the 91.75 territory. So that's why for now all eyes are on the downside here. But yep, let's see how and where this daily candle will end today. Gold is pushing nicely to the upside. I mean, buyers are very active. However, what I talked about this morning was that in a way the commodity could push further north. It could test that 1795 territory, which could in a way provide a resistance, and then if it continues to hold, if this together with the 200-day EMA, then yep, the commodity could reverse back down. As you can see, it overcame the 200-day EMA as well, but this downside line remains for now intact. If we get a further push above this downside line, then yes, that's where it could become a little bit more interesting for more buyers. But at the moment, don't get me wrong, I mean, yes, we're we're having a nice move higher here, but this could be seen as a temporary correction. But again, let's see how this is going to play out. For now, all eyes are on this downside line. If this downside line continues to provide resistance, then yep, another round of selling could be possible. Now jumping into cryptos, so Litecoin. This morning I talked about Litecoin, and basically what I was saying, that keep your eyes on that 90.37 sorry, 90.74 territory right here, because if it continues to provide decent resistance, then we might see maybe something of a possible double top pattern. However, don't get me wrong, for me to kind of maybe get excited with the double top pattern, I would need to see a drop, the price drop below this hurdle right here, the 68.94 zone, roughly around here, which is the so-called neckline here of this pattern, of this potential pattern. But I do understand it's quite a big move here to miss out on. But yep, for now that's the game plan. We can take a look at some of these levels here. For example, the 80.27 level marked by the high of the 23rd of 23rd of February here of this year. As you can see, we did today the crypto drifted lower, but ended up testing this area, from where it kind of rebounded back up. At the moment, I'm gonna probably take a bit of a cautiously, or I wouldn't even say cautiously anything, but I'll say a neutral stand, because on one hand we do have these two upside lines still in play. On the other hand, we're struggling with this barrier right here, the 90.74. So let's see how all this is going to play out. If we get another slide below the 84.19 level, which is marked by the highest point of February, now that's where it could become a little bit more interesting for more sellers, and maybe we could go for another correction lower here. So be very careful with that, and let's see how this is going to play out. Ethereum, similar story. As you can see, it did today did pop higher. It did overcame the November high, and look at this beautiful test, the 637 territory yesterday, guys. I talked about this level, and let me just scroll back here. That level is the 637 territory. Yep, that's the highest point of June of 2018. And this is where the crypto found very good resistance, from where you can see it reversed back down. And well, again, similar story. Let's see if this is going to end up being a potential double top. However, for me to consider that, I would need to see a drop below this hurdle right here, the 516.80 zone, and then yes, lower levels could be met. So for now, be very careful. And this level, by the way, is let me just go back into history again. There we go. So this level here is the highest point of July of 2018. So yep, let's see how the highest point of July acts as a good area of support. But to be honest, for that, we need to see a break of this upside line taken from the low of the 3rd of November. But at the same time, guys, we can skip all what I've said right now, because if this upside line continues to provide decent support, and we see another pop here, and we see a daily candle staying above the 623.50 territory, well, we can skip the whole downside idea and we can start aiming for some higher levels. AUDJPY, this is something that I've mentioned recently, to be more specific, this morning. So just a quick update. Basically, it continues to trade above this short-term upside line taken from the low the 2nd of November. But as I said before this morning, guys, you can have a look at the analysis done this morning in my traders espresso, that in order to aim for some higher levels, I need to see a nice good push above the 77.10 zone right here in order to get a little bit more excited with the upside. So for now, be very careful with this one, because if suddenly this upside line breaks, well, for me, I would prefer to see maybe a drop somewhere below, not only below the 21-day EMA, but also below the 75.76 territory right here, and then consider some downside. USDCHF, so the dollar index is drifting a little bit to the downside, we can see here, and however, although let's say the risk, the current environment in the equity world is risk on, you would probably see such instruments like Swiss franc and the Japanese yen kind of getting sold against other major their other major counterparts. Here you can see the opposite. Basically, here it's the weakness of the dollar that is driving this pair, and for now, previously I talked about this idea where basically we could see a drift lower below this 0.1993 not yesterday, but Yes, yesterday. Sorry. Yesterday I talked about the about this idea where, and last week as well, actually, the 0.9030 level. I've mentioned that level, and for you guys to keep an eye on, because it might provide good support, and as you can see, it did so. It did provide good support, although we're seeing a bit of a reversal back down again here. So how we could play this one out is, first of all, we'll keep an eye on this downside line taken from the high of the 28th of September. In order to aim for some higher levels, now I need to see a strong break above this downside line, and then also push above the 0.92 territory, but I'll get to that later. For now, all eyes are on the 0.9030 zone. Let's see if it continues to provide decent support. If it fails, my next target is the lowest point of November near the 0.8983 level. A quick update on GBPUSD. Not much is happening here on just the fact that we did get a push higher. We did get a slight break above that 1.34 territory, but then after that, you can see that everything started reversing back down. Of course, we do have the Brexit madness going on still, so I haven't looked. I think that there were some negative headlines surrounding that area, basically, because, well, I mean, they're still trying to figure out a deal, and so far it's not really looking well. So maybe that's what traders are reacting right now, and you can see the results here. So GBPUSD did initially move higher towards that 1.34 territory, but then quickly got sold, and you can see it's now trading back slightly above this 1.3313 level, or this, in other words, this highlighted area. I talked about this highlighted area already, because that's the area I'm keeping an eye on in order to consider the downside if this area gets broken. So yeah, for now we're still hanging above it, but we're struggling still with this 1.34 zone, so I'll take a bit of a neutral stand. Now, the interesting one here is Euro JPY. Now, previously I talked about this pair, and we were trading still below this downside line, and what I was saying, that if we get a push above this 124.44 level, then yes, higher levels could be met. As you can see, this area did act as a very nice area of resistance. We did push higher then. We tested now, or should I say yesterday, we almost tested that 125.16 level marked by the highest point of October, and today we're getting another test, and actually we're getting another break here. So let's see how this daily candle is going to end up being, because if we stay above it, then higher levels could be met. We could start looking maybe at the 126.46 level, but of course, also keep your eyes on the situation in the equity world. And another thing, of course, we do have something of a complex inverse head and shoulders pattern. So we have a left shoulder here, a head, and the right shoulder here. So basically, we are right now at the neckline. And if we do get a break and we see the daily candle remaining above this, then yes, we'll continue targeting the upside. So basically, keep your eyes on this idea. Let's see how this is going to play out. But if it suddenly starts reversing back down and let's say drops somewhere below this little territory right here, the 124.57 zone, now that's where we could maybe consider the downside again, guys. But for now, it's leaning a little bit more towards the upside. And finally, EURUSD. So EURUSD is again trying to make its way higher here. So this morning we were kind of almost at the same level here, but as you can see, today it kind of really fell by a few pips from reaching that psychological 120 zone. So for now, that psychological 120 zone is acting as a very nice area of resistance. I will remain positive for now. What I'm looking here for is basically maybe another test of that 1.20 zone, or even better, the 1.2011 territory, which is marked by the high of the highest point of September. Now, if that gets broken, now guess what? Well, I mean, this would confirm a forthcoming higher high, and more buyers could join in. So be very careful on that one. In terms of the downside, now previously I talked about this level right here, the 1.1795, but now given that we've shifted a little bit more to the right and to the upside, I would actually start looking at the downside if we get a move back below the 1.1880 level. I talked a lot about this one, if you remember, a few weeks ago, and not a few weeks ago, but last week as well. So yep, now this area, this resistance barrier, could become a nice area of support. So let's keep an eye on that one. If that gets broken, then this could open the door towards lower areas, because at the same time the rate would be placed below the 21-day EMA. So guys, I hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. If you want to catch my video later on, tomorrow morning, my Traders Espresso, as always, 7 o'clock GMT time. But for now, guys, I hope you have a wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.